Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back for another edition of That's Our Two Satoshis Live. Doing it solo today, but we'll review what's going on in the world of digital assets like we always do each and every week. You can also check out the actual blog itself on our website at ar.ca/blog. Before we get started, as always, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. All right, so getting started here, pretty good week in the digital asset space. Obviously, pretty large recovery from the bottom. The thing that kind of jumped out to me is it's for the most part we're lacking a lot of real news. Typically when we've seen some of these larger rallies, it's based on being sparked by something. There's been a little bit, right? We've had the liquid staking derivatives narrative with Lido and others that kind of jump started this. Obviously, you had the recovery from Solana from the FTX lows, but really hasn't been super substantiated really so far with individual project news. I think generally what we would expect going forward then is we'll start to see some projects coming out with some big news, whether that's tokenomics changes, or that is software upgrades or a partnership announcement. I think you'll start to see a pretty big um, news flow over the next couple of months here based on how well digital assets are trading thus far. But it's certainly been absent of that so far. So I guess the real question then is when does a bear market rally turn into an actual rally? You've seen this before. I mean, whether it's the equity market or the digital asset market, you can certainly see 20, 30% moves even in bear markets. Using the equity market, just for an example, you saw that I think 5 or 6 different times you had a move of higher of more than 15% higher in 2008 and 2009. If you go back to 2000, 2001, the NASDAQ had 8 different 15% rallies during an otherwise downtrend. So I don't know. I don't know if this is just a bear market rally and we're going to resume the downtrend or if this is something more real. To me, it feels more real simply because I think we were recovering anyway. If you go back to November and October, or really September, October, November of last year, we were starting to recover anyway before the FTX fraud was turned out. And then ultimately we dipped ferociously on FTX. And then really most of what we've just done in the last couple of weeks here is just retrace the FTX move. So I think we were kind of moving towards more of a period to health anyway before FTX. So my guess is this is more than just a bear market rally, but it's hard to tell, like I said, because the gains have been broad based. Um, and it hasn't been real specific to any one narrative or one company or project. What I think is probably the most important, though, for in terms of assessing the overall market health, is that this is still a pretty reflexive industry where price can lead fundamentals or vice versa. And what I mean by that is, because price is higher, what are the knock-on effects, right? Well, one is you have TVL higher across DeFi. You have volumes for decentralized exchanges and centralized exchanges that are higher. You have transaction fees that are higher. And as a result, sometimes price can lead to better fundamentals, which then lead to more investing, just like sometimes better fundamentals can lead to more investing and more price. So it can go both ways. And we'll see if some of this price increases, some of those increase in activities can lead to more longer lasting traction. The other thing I think is probably what anybody who's still bearish on the market, you probably have to remove your 2022 biases first and foremost and look at what's happening here with more of a fresh lens. But more importantly, macro funds for the most part had a record year in 2022, right? Everything that works for macro funds worked last year, from the commodity cycle to the response from the Federal Reserve with regard to rates and other central banks. Historically, macro funds don't do all that well. It doesn't work out that perfectly, right? That's why most macro funds also write newsletters and get paid more from subscriptions and newsletters than they do for actual investing. But if you are following the macro trends, the biggest change right now is that every indicator from 2022 that worked from the short side, meaning the rise in the US dollar, higher inflation, higher interest rates, wider credit spreads, the volatility in energy prices from the highs, all that has reversed so far in 2022. The dollar is lower, inflation trends are lower, interest rates are lower, credit spreads are narrowing, and energy prices are, of course, going lower as well. So if your only thesis is macro, you're going to have to come up with a new thesis because that's starting to move the other way. Moving away from kind of what's happened this week in the digital asset prices, I think the biggest news still is what's happening with Genesis and obviously its parent company, Digital Currency Group, and then through extension, Gemini, given that Gemini is now one of the biggest creditors of of Genesis' bankruptcy. So, as always, we want people to learn, and instead of just listening to us, I would recommend that people actually get into the docket, the bankruptcy docket. There's been a lot of them this year. You can go into Kroll, Kroll, and sign up for updates from these different bankruptcy dockets. But from everything from Three Arrows to FTX to Celsius, BlockFi, and now Genesis, you learn a ton from reading the actual filings that come out. And in the first day filings for Genesis, we already learned a lot. And I think there was, four pretty important takeaways. And shout out to Mike Dershowitz, one of my partners here at ARCA, for writing this section. But there's four basic takeaways um, with regard to what we think we've learned now with this Genesis bankruptcy. So first and foremost is that this is going to probably represent the end of the forced selling, especially the Grayscale Trust. So if you look towards the end of December, there was a massive move in GBTC and the Grayscale ETH Trust from 30% discounts to net asset value down to almost 50%, in an ETH's case, beyond 50% discounts. There was always speculation at the time that this was some window dressing, meaning funds who had positions that didn't want to report that on their year-end audits, which were selling. But there was also rumors that it was forced selling, either from DCG, who still owns a lot of the Grayscale assets themselves, or from Genesis, or both. And what we learned through the first day filings is that we have proof now is that Gemini liquidated about 5% of GBTC shares in November that were being used as collateral for the loan from Gemini Earn to Genesis. So effectively, Gemini Earn was about $900 million of client assets, which were lent to Genesis to earn a return. Sounds like that was on a completely unsecured basis. During November, when FTX went under, Gemini got a little scared and said, "We need you to put some collateral up against these assets that we're lending to you." They put up GBTC shares as collateral, and Gemini turned around and liquidated those shares. And it was about $284 million worth of GBTC that was basically dumped on the market. So a big reason for why there was so much selling pressure of the Grayscale assets came from that sale. With that now gone, given that once these entities are under court supervision in the bankruptcy process, you won't have any more forced selling. So that should be good for those who own Grayscale assets specifically. Doesn't mean we're going to head back to net asset value anytime soon, but certainly, we should continue to see that discount start to converge a little bit. The second is once again, DeFi just proves its superiority to CeFi in terms of the risk management, right? We learned a lot more in these first day filings about exactly how much was lent to Three Arrows in the form of $2.4 billion. And some of the decisions that were made now that we know the list of all the other creditors of Genesis as well. Um, to have this big of a hole in Genesis's balance sheet, these were individual humans making these decisions, and obviously those would not have been made had this been computer code in a more formulaic process in DeFi. So, again, I've said this before, I'll say it again. I think right now, 2022 is being viewed as the year of failure and bankruptcies, and for good reason. But I think 2, 3 years from now, we're going to remember 2022 really more in a positive light, which is that it was the proof of concept needed that DeFi generally does the same things that CeFi does, but does it better and with a lot less collateral damage. Um, I think the third thing that we'll take away from here is that prudent structuring in a distress situation or in a bankruptcy is superior to public spats. We've seen a lot in the last few weeks prior to Genesis filing in terms of Cameron Winklevoss from Gemini attacking publicly Barry Silbert of Digital Currency Group, and a lot of back and forths in terms of the lack thereof of progress or negotiations behind the scenes. Upon Thursday's filing, Cameron Winklevoss even followed up with tweets threatening legal action against Genesis. So, we'll see what comes to light, but generally, it's not a good situation when you see these public fights. Usually if you can get behind the scenes and actually work something out and come up with a plan of reorganization, that ultimately will be better for all creditors involved. I think probably the most interesting thing here is that, and maybe a little bit of a twist of irony, is that not all of the Genesis creditors are being treated pari passu or being treated equally. There's actually different classes of recoveries. And one of those different classes is Gemini themselves, which is ironic because the different path to recovery for Gemini actually comes from legal actions against Gemini. So A little bit of circular logic there, but because there's so many of these lawsuits back and forth, there could be different recoveries for different classes of Genesis creditors. And then finally, probably the only one that's actually more long lasting and has a real impact on the future of digital assets in this industry is just what happens to Digital Currency Group from here. We've already heard that they're trying to sell their CoinDesk division. I think it was rumored to being offered around $300 million valuation last year. Now we've heard $200 million. Whatever the case may be, it's clear Digital Currency Group needs to raise cash because this saga is not over. DCG still has more debt owed to Genesis and to others coming due as early as May of this year, and they don't have the cash right now to pay off those debts. So, could Digital Currency Group file, or will they be able to raise cash and do something ultimately um, to stave off their own bankruptcy is what we'll be following going forward. And I think they certainly have some outs, right? CoinDesk is valuable, Grayscale is valuable. They also own a fair amount of assets in their own venture portfolio, as well as still having a lot of GBTC and ETH on their balance sheets. So I think it's we don't have enough answers yet with regard to whether or not Digital Currency Group itself files. But what I think it's interesting is from a Grayscale aspect is that DCG kind of has a Texas hedge on right now, right? They own a lot of GBTC and ETH. So if there is some way to wrestle and dissolve the Grayscale trust, that would actually be bad for their ownership of Grayscale, the equity, but good for their assets, GBTC and ETH, and vice versa. If something good happens to Grayscale where they're able to sell it and monetize that, it's probably bad for the actual shareholders of Grayscale because that means that discount will never widen. So you have a scenario where Grayscale equity goes up while the assets of Grayscale go down, or vice versa, where Grayscale assets go up, but the value of Grayscale goes down. So that tug of war, that Texas hedge that DCG has on, is ultimately, probably going to be impactful to the market as we move forward. So we'll continue to update on the progress of DCG and the bankruptcies here as we go. But ultimately, that's been probably the most interesting story in the market this week, even though it's had very little impact overall on prices. So as always, we'll be back next week. Appreciate everyone listening. Check out the blog and hit us on Twitter or through our email on our website if you have any questions. Thanks, everybody.